Hey, Tobias, can you guys hear me? Tell me you're hearing sound good with no echo, no weirdness today. This is awesome. I'm going to go through some screens. We're going to test them, and then I'll get everything set up, and we'll be starting here in about 7 or 8 minutes. Okay, so you're going to see this screen. Should be able to hear me just fine. I'm just going to go through screens and let me know if there's any weirdness. So you should be able to see me and hear me finally. Let's do this screen. Make sure you're still seeing, hearing me, all that, right? And then I've got some new screens on Zoom. So you should hear me here, see the screen, and just confirm, yes, yes, yes. Thank you. Yeah, I'm not sure what just happened. As I was getting set up, the futures were down 17 on the S&P. They rallied about 10 handles just out of nowhere. NASDAQ rallied quite a bit, actually, about 35, 40 handles. All right, this is good news. Yeah, here's that rally I was just talking about. Not sure. Yeah, there was a screen that should have been really zoomed in. That's my new Zoom. I've been trying to figure out how to zoom in on stuff. So it should be good. This screen that you're on now should be full and look normal, correct? I'll stay here. Thank you, Derek. Appreciate it, man. Awesome. Thank you, guys. Appreciate it. Yeah, we're finally going to have a smooth stream for once without weird voice things and stuff going on. So I'm going to just get a couple things ready. We'll start in about 5 minutes. Thank you, Mr. Tater. Hope you're doing well. All right, folks, about 2 minutes. I'll be right back. Well, welcome, folks. It is Wednesday, 1:30 Eastern Time, so just confirm that you're hearing my voice. It should be fine. We checked it out earlier. Just want to check that out before we get going here. Audio is fine. Awesome. Welcome. Well, folks, there's a fair amount to talk about, and I'm going to focus on a couple things. In the past several weeks, I've talked about MMT. we've done. We talked. We're going to spend some time talking about bonds and what's going on with the Fed and those type of things today. And I'm also going to be covering a lot of stocks up front that, and I'm not picking, please don't think I'm becoming a Kathy Wood troll. I am not. But I put a tweet out last night that I think the ARKK could go down to 105 to maybe the 95. It's at 130, 128, I think, last time I looked. So it's getting absolutely wasted. And I'll go through that detail here shortly. I'm going to do my usual setup that I do, and I'm going to go through all the indices and talk about what's going on. There's a serious rotation going on. You know, Russell's doing really well, and even the Dow Jones. So we'll go through all that detail here in a minute. But there's a lot to talk about, and there's a lot of things going on. I really feel this market rolling over, especially on the tech side. And the unfortunate part of everything that's going on right now is the small caps are usually the last ones to kick in at the end of the cycle. And so we're seeing that happen. I'm not actually saying it's over this very moment, but there's a lot of interesting things coming out right now that I'm going to be talking about. So that's all going to get in. It's going to be really interesting. I was just looking at the chat, and yeah, I think Kathy Wood is in big trouble. They're trying to buy the dippers and buying Zoom. We'll go through it all. There's just a lot. I had Jay get a list of all their constituents. I built a portfolio. I'm going to show you some of that, and we're going to go through those stocks that they're holding and all that stuff. So, yeah. So, gosh, there's just so much going on because every one of these high flying stocks that were rallying going back to October to recently until January with all these highs that we saw, I think they're going to take it back. You know, if you're going to hold, it's going to be a tough ride. And I think a lot of these big high flying momentum stocks are going to be given back a lot. And that's at least how it appears from my viewpoint. And it's going to be the focus today. That along with what's going on with bonds and the yield curve and all that fun stuff. Yeah. So, okay. So let's go ahead and start to dig into some charts here just so we can get some idea. And I did figure out potentially how to zoom. So I'm going to look at your comments when I do these, when I'm focusing in. I've had issues in the past trying to figure out how to zoom in on things. So let's go ahead and go over here and start digging into some of these charts. And I think one of the interesting things that we have to look at is just the overall configuration. It's what I talk about every night on the channel. And I'm just seeing this momentum. You can see these PPMs on this chart here. They're just all fading. And these are, PPM stands for price pressure momentum. And the pressure is on the downside. We're just about in trend mode on the futures on the downside in the S&P. Now, we did trade down to 38.33. And if you look at the market grid here, let me just put this up. And as I talked about these numbers last night, a couple numbers that came into mind is that we could print back to the 40-day moving average, 38.39, the low 33, and then we had S2 at 38.31. So if you recall, I was calling for an R1 S2 range. So far today, we actually printed up to 98, so we almost made it to an R2. So we've had a pretty decent range today from that standpoint, but we're looking at it printing down into this S2 level. I think we're probably seeing the worst of the day. You've got the 40-period moving average. You got all that stuff in here setting things up. Let's go over to the SPX just for a minute because this is also showing that same basic numbers. The 40-period moving average 38.44, and the S2 38.40. We had a low of 38.37, so we printed just through S2 and bounced, and you can see the high on the cash was 38.74, so we didn't even get to an R1 on the cash. The futures obviously had a much wilder range since they've been trading for quite a few more hours than the SPX has. So so I see Tobias, you're talking about the that's interesting. I'm going to talk about, Jonathan, I'm going to talk about the concentration where the Fed's actually buying these securities, where they're buying right now. So we'll talk all about that here in a minute. But the PPM3 here just not getting an acceleration. And this has been the problem. We've just been rolling over, and I talked about this just a little bit with the I'm changing screens. I'm looking like I've got good quality audio on all these pages, but just let me know if anything happens while I'm switching around from these screens. But the primary thing that I've been talking about here is that nobody wants to own this market over 3,900. It gets up there, and you can't find the bag man. We used to talk about this on the trading floor all the time. We're trying to find the bag man, or don't be the bag man. And anybody that's paying up over 3,900 based on the indexes have a lot of issues. And I'm going to break down all of this stuff here in a few minutes on what's going on with these tech stocks. Apple, Tesla, the whole thing is just rolling here. And we're still seeing the Russell up 0.6 on the day. So we'll talk about the spreads and everything here in a few minutes. But I just want to go through what I usually do on the S&P and do the daily. We're going to go weekly and then monthly, because there are a lot of things setting up here I think are telling us about what we're about to go with here. The thing that I've been talking about for a while is that the annual, or this anniversary of last year, right now, this very moment last year, these markets were getting hammered. COVID thing was just coming out. Everything was coming out right now, and the market carnage was ugly and scary and all of that. And I talked about this anniversary. We actually have the 55-week cycle, I believe, is not this coming week, but the week after that. So we have a lot of cyclic influences that are coming in here. If you believe in that stuff, I use it as a backup to some other things. I'll talk a little bit about our database, which gives us some really good insight into what's going on there as well. I suspect we're going to see more short-term selling tonight, and that will be more interesting. I'll cover that here in a minute. But as we look at the weekly chart, a lot of times I talk about this 10-period moving average, where what I call the demand line is. So if there's an uptrend, right now PPM1 on the weekly is at a 0.40, PPM2 0.49, and 0.58. So all of the weekly trends are still in an uptrend. The short term is neutral to down at the moment. So what we're seeing is coming back into that demand line, which has been the 10-week moving average. Now I'm going to attempt to zoom in on this thing, just see what I can get here. Yeah, so you're going to be able to see here on the 10-period moving average. It's just been this has been the primary line. We've been below it a little bit, but the PPMs remain at a level that tells us we're going to hold it. So right now that number is 3829.85. So this is right where the demand line is, and typically what we're going to see based on that is you're going to see the market stay within probably an S1 is going to be an extreme. If we do break down even further here, that'd be 37.90 on a weekly. I'm not sure that's going to happen. The short-term charts are turning a little bit more negative, And, so we are seeing whatever that bond purchase was, and that little pop for $10 is out of the market already again. So, but if we look at this, you can see this line here. This is exactly where this thing is has been hovering along, and it continues to go on. And now this is one other thing that I talk a lot about on as I go through these things is when we see the market grid narrow down, so otherwise it's wide, it starts to narrow, what happens is that tells you that it's very susceptible to a downward move. So typically the volatility will contract in this, and these market grids are based upon a 3 and 5 day average range, and then there's some Fibonacci calculations that are going on that form these lines. And when they start to contract, that just tells you usually markets will contract before they're going to make a shift in trend. And right now you can see, just looking at PPMs, everything on this screen here is absolutely 100% neutral. There's no real downtrend on a weekly. It's actually a uptrend, and it's a steady uptrend. Like I said, at 0.40, there's literally only a 40% probability that we're going to close on a Friday below 38.29. So this is going to be your pretty solid support in this level. So let's go out to the secular level and just take a look at the monthly chart, and we'll see a similar thing where the monthly has rounded off. We're starting to just hit up on the top end of this monthly range. Right now, the R2 is 39.04, R3 39.53. The highs on SPX was 39.50, I believe, made last week, 39.50.43 2 weeks ago. So we're definitely seeing this thing just stall here. And on a monthly basis, the trends are off the map strong. So I want to break this down, and just so you have a complete understanding of what's going on. Short term, we're neutral to down. Intermediate is up, and secular is up. So we're not about to make any major rollover, but what we will go, and I'm going to go through the NASDAQ and then the Russell, and then we'll do some spreads. What we're really seeing here, and I've been talking about this, and you guys have been watching this channel for a while. I've been talking about this since last July, August, about this rotation and change in the markets. And I said, if we're going to go higher, this is the way we have to go higher. That's still the case. So I'm going to go through this entire process here. And it's just absolutely wonderful not to be dealing with audio issues like we did last week. But these secular trends are up. We're above all the first, second derivatives. Everything that I'm seeing on the screen here is a firm up market and doesn't look like it's going to roll over. Now, it could go down to the bottom of the grid, which is quite a ways down, which is down to 3,600. But I don't see that, just based on the weekly stuff. As I mentioned, 38.30 is a support, and below that was 37.85. We actually touched on that briefly last week. I think the low last week was 37.20. This is monthly. Last month was, let me go back one step here for a second. Yeah, the low last week was 37.89, and that was right in line with what was expected within the pattern. So everything we're seeing here is as normal as it can be. But when we start to look at some of these individual stocks and things here in a little bit, you're going to see that it's much more chaotic once you get off of the indexes. The indexes are definitely seeing some pressure. We're down 20 handles now on the S&P. What's the low? I said 37. So we're still like 13 handles off the lows, but we're definitely seeing some selling come in. So I just want you to understand, and this is going to be, for the most part, the same analysis across the board. So let's do NASDAQ, then we'll do Russell, we'll do the spreads next, okay? So So we're going to NASDAQ futures here. Let me go to a daily first. And this is what I was discussing briefly in the video last night, is that what we're seeing is this 10-period moving average is down 0.70. It's a huge downtrend. Short term on the NASDAQ is down, where on the S&P it's a moderate down to neutral. This is full out down market here. We're now down 284 again, so that little bounce is over. We're actually printing down at the lows of the day here. The lows 69.74 is the last print. And if we look at the market grid for today, you can see S3 is 12,780. We're 12,769, so we're just below. And the STX, which is 12,695, we're still quite a ways from there, another 80 handles. But this is where this thing should find some support, but there's no way it's going to be a buy yet, not with the PPMs all pointing down. We're looking at, like I said, PPM1 is a minus 0.70. That suggests that resistance at 13,177. I talked about this last night. It was 13,220, I think, or 210. You can go back and fact check me on the video last night. So that's going to be the ceiling for the day. So we're looking at the potential R1, S2. We're actually going R1, S3 are ready, and we're probably mostly done, but this thing could get out of hand depending on what's going on out there. So you guys are my ears right now. I'm focused on the analysis. So if you see anything, let me know what's going on. And so I'm going to just go through the weekly, monthly, Russell, and I'm going to really roll through this stuff because I want to get to the bonds and the interest rates, because this is where the big story is going to be. So as we go to the weekly NASDAQ futures, we're looking at 12,605 is the 21-week moving average. The low 12,769. We look at the grid for the week. We're looking at 12,627 is the S2. So we're printing an S2 just about for the week. And the other support line there is at 12,605, which is PPM2, which is the 21-period moving average, and PPM2 is up at a 0.40. So unlike the S&P, where we have uptrends on all three levels, we actually only have uptrends on two levels, which are the intermediate and the secondary strategy. I talk to you folks about this all the time. I believe there's three trends within every trend. So within a daily, there's kind of a short, intermediate, and longer term fractals within the larger scheme of things. So that's what these different PPMs are measuring, what the output is. So right now, we are seeing all of the there's the green and cyan lines are the first and second derivatives of the PPMs, and we've broken through all of those. So we're definitely seeing this rollover. When we get this type of configuration, it does tell you that we're going to at least test that 12,605, and we can look at the S2 12,627. So those levels are probably going to get tested this week. So there's more downside, could be yet today, the way things are trading. And you think about it, the NASDAQ was down 4.9, went up three and a half the other day, down a couple. We're really almost right back to where we were last Friday again, just like that. So that rally that felt so good on Monday doesn't feel so good anymore. As a matter of fact, we're getting this reversal pattern. So let's go to the monthly, and then I'll hit the Russell, and we'll keep rolling through these. So monthly is really interesting on the secular. We are seeing things starting to break down on the S&P, on the NASDAQ, but the major support in this market is 11,932. So I'm going to mark this at 12,600 to 12,900. We'll just round out the numbers. That's going to be major support down there. And at that level, there might be some opportunities depending on how we see the daily chart set up and those type of things, because there's a lot to watch here. And right now, all the pressure is pointing down. The monthly is still in a very robust upward secular trend, and I'll break down just like I did on the S&P. So we have the Nasdaq short-term, daily downtrend, full out downtrend, weekly moderate uptrend, and monthly the secular trends are still very strong up. So as far as like a major collapse happening from this level, it doesn't look very likely. That would not probably be likely until maybe into May or June, when that's going to set up as far as a big rollover. So maybe the adage sell in May and go away will actually work this year. We'll see. Certainly didn't work last year, right? So let's okay. So let's go and take a look at the Russell. We'll do the same run through the Russell. And now the Russell daily, it feels like it's levitating better than the other markets. So we're just in this sideways range. And I've talked about this a lot. I want to draw something on the screen here real quick. I just want to make sure that we can get all this in here. But so let's draw in. This has really been the box that we've been stuck in for a while here. We'll just call it about here. We've broken underneath it a little bit, but this has been where this market has just been staying in this pattern, and it's been doing nothing, where the other markets have a little more defined downside than the Russell has. That's why when we go to the spreads next, you'll see it. But this pattern that we're in, we're still stuck in the pattern. PPMs are basically flat on PPM 1 and both in trend mode and PPM 2 and 3. I'll clear out some of these lines so you can see this. But this whole pattern is here is really focused in on this it's all focused in just around these moving averages. The 10 and 21 have crossed over, and then it looks like the 40 will be in play, 21,892. Let's go to weekly, because I think we'll see something more interesting there. And the weekly has a very robust trend on the Russell, which is doing better than I guess the other markets are. We have a 1.07, 1.47, and a 1.22 on PPM 1, 2, and 3. These are very robust trends. That same demand line, the 10-week moving average for the Russell is 2165. So all we're seeing here is this consolidation that we've been doing for the last 4 weeks. We printed a high and we've just been drifting through, and this is pretty key. We did get that RXT sell signal, which suggested sideways. We had a little upward bias, but basically it did come back in by the third week, and it typically will come into the lower end of the market grid during these periods of time. Now this is going to be the chart to pay attention to. This is the big trend with the PPMs just off the map, up 4.94. Anything over 0.25 is an uptrend. So we're looking at 4.94, 5%, almost 2% on the weekly per week change, and a 1.09% change on the 40 period moving average. So this is a trend that's not going to go away for a while. So I am not sitting here trying to tell you folks that somehow there is a major top here, but there is this major consolidation is happening, and we're going to go to the spreads next. And then this will make a little more sense when we go over and take a look at some of the spreads, because those are the things that are important to understand these relationships and what's going on with the rotation of the stock. So let's go ahead and take a look at those. Now I converted this over. This is the Russell versus the NASDAQ. Let me move this out of the way. And let me get out of the way. So what you see here, this is the weekly chart. If I go to a daily, you'll see this much clearer. And this is huge. It's surging today as we get the NASDAQ down big numbers and the Russell up slightly. So we're seeing a big move here. This thing is going to continue. I'm going to go through the weekly, and this is going back to last August when we were down in this pattern down here. This is where I was telling you that this was the place to put this trade on, where you're long the Russell and short the NASDAQ, and this is a big trade, and it's not over. So as we go out in the time span, we go to weekly, you can see this has been declining since 2017. So what that means is that we're continuing to see over all these years, there was a continuing underperformance of the small cap over the large cap. And we know there was a shift that happened going back to 2014 and 15 in the markets, and the markets got very focused. That's when the fangs and the top end focus happened in the S&P. And those of you who've been around for a while, we deal with a lot of we deal with a lot of institutional clients, and I can tell you it was almost impossible to make any money in 14 and 15. Even the likes of Ray Dalio couldn't make any money in 14 and 15. And it was just, there was no rotation. There was no participation in a broader sense. It was a very narrow market at that time. And we came out of that into 16, 17, and that period of time was a much better time. But you can look at these spreads, and we go back, I think I can go back here just a little bit more, and we can get to, yeah, so this was 14 and 15. Let me go to monthly, because this will probably, I'm going to show you here in a minute. Just let me put this up on the screen for you. Yeah, this will really illustrate what's going on with this, and this is important to understand. So this is the big story on the small cap versus the large cap. We can go all the way back to the 08-09 crisis, and this is where this thing really started to roll over here. You can see up here, this is 2008 at the peak, and it's just going. Here's 14 and 15 where we saw that period of time I told you about. There was a little bit of time coming into 16 that the small caps participated, and then boom, then we get all the way into here. Now we're seeing, when you look at this from a secular viewpoint, and you're looking at this from you're looking at this just from the long-term view, then this is a whole different story. And this would say that the Russell and the small cap stocks have a long ways to go in coming back from where they have been. Now, there's some other elements, and we're going to go through, after I finish this, we're going to dig into interest rates and talk about the Fed and do some of that stuff. But the bottom line is, what we're seeing here is this is a big shift. For the first time, this looks more material than I've seen in the past. There's been some other attempts like this. It's just a matter of whether it's going to be able to stay on for a long term, and we can go through all of 2021 and into 22 with the small caps being in play or favored over the other stocks, the large caps, especially the tech stocks. And that's kind of, this whole show today is kind of leading me down the path to what I really think is happening in the stock market. And I want to come on screen just to talk about this for a minute. is what I really think we're seeing here is a rotation out of all of these stocks. It's visible on the chart I was just showing you. That is actually one of the drivers for the markets to remain somewhat stable. So if we break down everything I just said for how long, like for a half hour, right? If we go through all of that, what I said is the all of the indices from an intermediate and a secular viewpoint are all in uptrends. So S&P, NASDAQ, Russell, all in secular uptrends, all in intermediate uptrends. No real disasters there, but some kind of correction setting up. And sometimes these short-term corrections kind of start to feed on themselves and they grow into something bigger. At the moment, I don't see that danger. I do see the downside limited to a large degree. And so we're going to see a lot of grinding up here. This probably, as I mentioned it, if you're watching the section just a few minutes ago, then you're going to understand where the context is of everything. But this spread is going to have to lead our way further down the trail if it's going to happen. So, so next what I'm going to go to, and we're going to talk about the interest rates and the Fed, and just to kind of get a little bit of perspective before I go into the charts here, is that the Fed has made it clear that they're going to continue to buy lots of securities. Somebody pointed out, I think it was an 8.9 million purchase or something, and that's probably what popped the market right when we were starting the show today. So that, from that standpoint, that's good, but it's just a normal purchase. And what they're going to focus in on is the 2 and 5 year sectors. And when I go through the interest rates, we'll go through the yield curve and what's going on with some of these different elements of the yield curve. But what the Fed's doing is they need the yield curve to stay steep to a point, but not too steep. It was getting out of hand. They definitely stepped in and did a lot of buying of the 2s and 5s. I'll show you that here in a minute. And then so the yield curve somewhat stabilized, but now we're seeing the yields going up. And I was talking about just in last night's video that, and a couple, I don't remember which day, they all blend together for me, but I was talking about there's no way that the uptrend in interest rates is done. It's still ongoing. The trends for rates are still higher, and I'll go through all those details. But the Fed wants that to happen. That's going to benefit the chart I was just showing you with the Russell, the financials. We probably still have the energies in play. I was telling you about that several weeks ago. Those are places to play. I think it was about 6 weeks ago. I was telling you about these new sectors that you want to rotate to if you're looking at stocks. And so the point is that this is going to have to be the exact situation that's going to have to continue to keep the markets at least in that uptrend. And the summary of my first part of this show today is really all the markets, intermediate and secular trends are fine. Probabilities of a crash or anything like that are very, very low at the moment. That could change as the weeks go on. But at the moment, the metrics all suggest we're still in this uptrend. There is some potential on the short-term models because they are turning negative that you could see further selling in here, but there's a limit to how far it's going to go. And we know that we have the current market environment, and we've got a lot of new entries in the market in the last year, a lot of new players. And what's happened is we get these, and we've always had them, but we get these stampede in, stampede out markets. So everybody leans one way. You throw the algorithms, you throw some other stuff in play, and there's, you've got a big day. We saw that on Monday, right? And matter of fact, this started on Sunday night. I almost started Sunday night's video on, here we go again, another Sunday night rally, but it faded, as we know, because where we're trading right now. So let's go through the treasuries, look at the yield curve, talk a little bit more about this subject, and then that will lead us from here to talking about dollar, gold, silver, and Bitcoin. And then I'm going to do one more segment here. I've been actually, this feels really good. Very, very efficient so far, getting through a lot of information today. So once I get through all this other stuff, probably by the first hour, I'm going to be able to start to move toward talking and breaking down a bunch of these stocks. And like I said early in the broadcast, is I'm not a Kathy Wood troll. I'm not trying to do anything other than I'm doing analysis. Jay and I've dug through all of those funds, and they're just not good funds, folks. You know, I hate to tell you, they have anywhere from 2 to 4 times the risk of the S&P. They're very highly concentrated, which works when it works. We used to say in the trading floor days, it works until it doesn't. Well, right now it doesn't, and they're trying to buy dips. Money is actually flowing. It was flowing in massively. I believe money is flowing out now. People are selling those ETFs, and it was interesting. I'll save this when I go to this, because I did watch Kathy's video that she does, and I thought it was very, very interesting, and I'll review that. And the goal here is to cover the stocks that are going in there. So we're going to hit on a lot of stocks that you're probably going to ask me about when I go through. So I'm going to go through a lot of these things here. So let's go into the interest rates and see what we got going here. 1 second. Okay, so a couple things to cover. I mentioned this last Thursday. We got this RTX sell. This is where the market closes above the extreme for the day. That happened. It signals a 2 to 3 days sideways. We got exactly 3 days right to the 10-period moving average. Talked about this last night. We wake up this morning, market pops, and we're all of a sudden we traded through RTX again on the daily mode. Now this is interesting. Those of you who watch the channel for a while, you know that this is, let me see if I can zoom in on this a little bit. Yeah. So this pattern that's right up here is actually what I call a dragon head. And typically what happens is these will consolidate for a couple more days, and then they resume in the direction of the previous trend. So the previous trend was up. We're going to consolidate, and then we go up again. And there's going to be some challenges ultimately of the 1.61% level that we hit. And I'll show you here in a minute as we go through the weekly and secular charts. I'll show you exactly what's going on there and where these trends are evolving to. But we're seeing PPM 1, 2, and 3 on these things. 1.18, 1.46, 1.17. These are off the map bullish. These are so strong that the probability here yesterday when this market was down at this level, the probability of it going through that 10-pair moving average was less than 10% today. You can see we just bounced and we ran away from it from a technical viewpoint. So when we go over to the weekly, you're going to see that we actually got an RTX sell on a weekly last week. The high last week was that 1.614. So far this week, we've seen a high of 1.498, and we also let me bring up the market grid so you can see that on here as well. So the market grid, this is a weekly. R1 1498, exactly where the high is. So far, it's an R1 hit. If we get through that, then 1.54, and you can see it's interesting that the extreme on the market grid is 1.619, which was exactly this 1.614. So it's almost an exact. The extreme for this week is exactly a retest of the highs. But these trends that we're seeing here are more significant in that we're seeing 4.73, 3.31, 2.44. This is a weekly graph. It will take, let me get you full screen. I have to remember I'm zooming in now. But these PPMs, this is where I'm talking about below here, is that these PPMs are absolutely looking at major uptrends here. So this trajectory, I talked about this a lot last week, and if you're a usual watcher of the live streams or my channel on YouTube, I talk a lot about the trajectory that's being created by these moving averages. Most people look at moving averages. I've spent basically my life's work from the early 1984 studying moving averages, probabilities around them, and what they tell a bigger story. The bars are important, but these moving averages tell me everything, and this has just been my life's work from that standpoint. So hang on a second, I got skewed there. So here's what, so we did get the RXT was 4.51. We closed it 1.45 and 1.46. So we did get an RXT sell on the weekly on the 10-year. So that's 2 weeks sideways. Typically what we'll do is we'll come down to our S1, S2 on the grid. So right now that number is S2 1.382. So far this week, we got down to 1.403. So we didn't quite get down to that 1.38, but we also had that 10-period moving average there. And I'm going to draw in this trajectory because I believe this is important just for you to understand what this is in case you haven't seen this presentation before. But this is important to understand. So these moving averages right now at these current rates of change or upward price movement are projecting out in this type of mode here where we've got these trends. Now at some stage, sometimes they'll accelerate. That's what we're measuring, the acceleration and deceleration, and these other two lines are the first and second derivatives, which I use those to figure out whether there's going to be a shift in trend or not. And the first shift in trend came over here, way back here in August and September. And we did get that. You see here, I got RTXL over on the left-hand side, basically 2 weeks sideways, but this thing just went sideways. But this trend has been very deliberate as we went on. And we keep getting, I'm going to clean this up, it's getting dirty. We keep getting these RXT cells along the line. And you see, we get sell, we go sideways, sell, sideways, sell, should get sideways. And each time we're stair-stepping up, the ultimate price target is the 200-week moving average, which is 190. So, and that's coming down, so 185, 190 is probably going to be the peak of this thing. Might be a little higher, but this is on the weekly trends. This is the important thing that is I want you to understand here. So these moving averages, because they are what they are, they often because they're being calculated on a weekly basis, they're going to continue along that line I was drawing in to a point. And if the markets even go sideways, they could go sideways for 5 or 6 weeks, and these lines will keep crawling up underneath. The rate of change will slow down, but it's still going to be in an uptrend. And this is why the understanding the trajectory, the PPM levels, gives you an understanding of the probabilities of certain things happening. And right now, the support levels are way below where the market's trading, but we're definitely seeing this trajectory happen. So let's go over to the secular and go to the monthly, and then I'm going to tie some other things. Now, we got a monthly RXT sell on the treasuries. which tells us we get 1 to 2 months of sideways, and it's going to be sideways within the market grid. So let me bring that up so you can see what that range is. The high end of the range is 178 right now, and we also have the 40-week moving average at 189. I just talked to you about the 200. This is, I'm sorry, the 40-month moving average is 189. We'll call it 190. And the 200-week moving average is right at that 190, 191. So this is the target where this thing's heading. PPMs are, PPM 1 is at a 9.80, and I suspect this is going to bleed off over the next couple months. Remember, this is a monthly chart, so there's not going to be another bar until, you know, April and May. So we're looking at probably stability, the possibility of trading up at the high end of this range to 170, 178, and that would probably freak out some people. And while I was talking, we now have the S&P down 32 handles, NASDAQ down 331, and the Russell actually has turned south as well, down 0.5%. So we're getting a lot of heavy selling here. This is I love when we have live streams and we get this type of market action. There's just really makes it interesting. But all of these things are happening. The yields are going to continue to climb. The Fed's going to stay on this yield curve. I'm going to go back and show you the yield curve here in a second. We spent a lot of time just talking about the trends, but here's what's really happening. Okay, two things are happening: is money is exiting the U.S. Most of the foreign money will get stored into treasuries. So the selling in treasuries has a lot to do with money exits. It also has a lot to do with the rotation in the market that I talked about in the spread. So everything I talked to you about today is related. The spreads, how the Russell's doing versus the NASDAQ, the interest rates, and there's some sectors that we'll look at here in a few minutes just to completely unpack this thing, so you understand where the areas are going to be, where you're going to be able to focus on investing. And you're going to see in a few minutes when I bring up Kathy Wood's portfolio, I bring up the ARK portfolio, our models are already 50% in cash. We've been in cash for a while, so we don't have near the downside that ARKK does, because we've been selling out of all the short-term stuff. It's just gone. While Kathy's buying, we're selling. And that's what you see when you start to break into these minor trends, and you can trade on a multivariate level. So what we're seeing here, though, in this long-term chart that I was talking about on interest rates, is that's the selling, liquidation. That money's going somewhere. I used to always say my job is to figure out if it's coming out of somewhere, where's it going to go? Money. What was the old Wall Street movie? Money never sleeps. Well, it's going to find a home somewhere, and that's all. There's so much capital out there, and the bond markets are so giant relative to the stock market. If you look at corporate debt, you look at sovereign debt across the world. We all know what's happened to debt, right? Trillions and trillions of dollars of debt, all in treasuries and different things out there. So there's a lot of money that's looking for a home. And some of that money looks for yields. Some of it will get parked in cash. Maybe that's also, we're looking at, maybe that's where a lot of money has flowed into Bitcoin. We know what Elon Musk has done, and there's just a lot of shifts of capital. There's never been more money in the markets than there is at the moment in time. Mostly because everything's leveraged up through this debt and everything that's going on. But, so I'll digress. Let's go in and let's look at the yield curve real quick. And just so I want to show you a couple of things there, and then we can start to move on to the dollar and get into gold, silver, and Bitcoin. Okay. Yeah, so this is what's going on with the yield curve. And I mentioned it in last night's video, is we did see it recover. It got slammed on Friday when the rates came down from the 1.6. They closed at 1.54 on the 10-year, and then they came back in on to the 1.4 range on Friday, and then we saw more of that. Now we're seeing a rebound back up at 1.17 or 1.47, something like that. And now we're seeing the yield curve actually flatten a little bit. So those purchases that we saw from the Fed were in the 2 and 5 year. This chart here is the 5 versus the 30, and that's a chart that they're watching really closely. They probably want this thing to narrow. You can see we can go back to, it looks like this is all the way back to the lows. Yeah, so this is where my cursor is at the bottom here, is actually 420 of last year. So we're looking at this curve that's been expanding. I remember when all the stuff was going on, people were talking about zero negative rates and all that stuff. I said, no, the Fed wants this yield curve to do what you're seeing here. Now what they want is they want it to stabilize at these levels. They don't want it to get out of hand. If we start to see the yield curve steepen beyond what we saw last week, that's going to be a problem. It's going to be a big problem. And that problem, what we saw last week, will just go exponential from that viewpoint, because this is going to put a lot of pressure on the markets. I'm going to go to another spread here for a second, and this is the 1030. So this does not have quite the impact that the 530 has, but this is really big. And those of you that know my background, I used to actually consult a lot of banks and trading rooms back in the late 90s. I was primarily a consultant, and I had a newsletter called the Daily Quant Fixed Income Report that I sold only to large institutional rooms. And what we focused on were these spreads. And I've talked to you before about the spreads and what goes on from the standpoint of banks don't take risks. Banks aren't risk takers. They don't do it. They play spreads. Everything they own is spread against something. Now, they have some trading operations that they make money in, but when it comes to the bank's portfolio, their holdings, their core holdings, they don't speculate. In fact, if you saw a bank that had a maturity yield of 7 years, that would be so long you can't believe it. Typically, they run 3.5 to maybe 5. When they're really bullish on bonds, they're 5-year spread. So what you're seeing is that's why these spreads are seriously important. This tells you everything about the banking system. This tells you everything about the conditions and the profitability that the banks have opportunity in because of these spreads. So the steepening is a good thing for the financials. It's a good thing for other areas, and it does cause a lot of money to get shifted around, and that's what we're seeing in the markets right now. All right, so let me get set up on another chart here. So we're seeing a little bit of let me get over to the daily chart on the Dow. So we're gonna do Dow, gold, silver, Bitcoin. So looking at the Dow, this is the daily. We've gotten back above the averages. There is no trend whatsoever here. There's not an uptrend. There's not a downtrend. It's completely flat. You can see how we've been trading really going back to the beginning of the year. We've just been waffling in a range, couple spikes above and not very much below the bottom end of the range. If you took all of these numbers and did a median price over this period, it's probably like drawing a line down the middle here. Just absolutely flat line, probably really close to where this 40 period moving average is running through this market action here, and that's right now at 90.53. So that we had a low of 90.63, 96, 91.06 high. So let's go to intermediate and look at the weekly. Weekly trends, we have a 21-week moving average coming in right here. And just like there's a slight downtrend from the viewpoint of the intermediate. The PPM2 is minus 1.1. It's not significant. It does tell you there's some resistance at 91.28. Above that level, then you're looking at 92.90. And we are starting to see where the PPMs are starting to show some bottoming on the weekly. So we could start to move up towards this 92, 91 level. And that's not going to do anything good in any way for gold, which is getting hammered again today. But let's go ahead and take a look at the monthly chart on the Dow, and then we get the big secular trend. 92.52 is the 10-month. It's dropping about 70 points per month right now. So that's going to put us 91.5, 91.30 is going to be pretty major resistance over the next couple months as we come into April and come into May. So the Dow is somewhat limited there. So just a quick look over at the markets for a minute. NASDAQ down 356 now. S&P down 34. S&P is faring a lot better. Now the Russell's starting to accelerate a little bit, down 0.73. So we're definitely seeing that accelerate a bit. All right, let's go to gold. I know I've seen a lot of comments. Folks have been waiting for this, so let's do a couple things here. So this is daily gold. We actually have an outside reversal bar going where we made a higher high than yesterday, a lower low. And when that happens at a low, what matters is where we close. So if we were to rally back and close at 1744 or higher, that would be significant and would be a reversal. But yesterday we had that reversal. We had some higher prices last night. We couldn't hold it. We basically went through a brief sell-off there from the standpoint of where the markets went to. So yeah, so support S3 16.99, low 16.99. That's right spot on the daily market grid. You'll see over on the left there S3 16.99.9. The low 16.99.4, last 17.13.40. So a little bounce off of that level. Let's go to the weekly because this is where this thing is really still getting a lot of downward acceleration. In fact, I'm going to change this. I keep updating the Fibonacci from the lows here, and it's getting worse by the week. And this, let me change something here. The pattern that's setting up here is actually, I've been talking about it prior to the last 2 weeks that this was setting up as a bullish pattern. We're still down at the lower ends. We're getting down to last June's low here. See where that is. 1708. We're at 1699, so we took out last June's low, and if we went to the pandemic low, that was at 1509. And what will come into play then, before then, is going to be this 200-week moving average that's laying underneath here. That's sitting there at 1801. So is that right number? Yeah. That's not right. Hang on. 1547 is that number. So that could be where we're heading. I've been talking about this a lot over the last several weeks, that there's just a relentless seller. They just won't quit. And there's no one seems to want to own gold at this moment. So it's an interesting configuration that I'm going to put up some and see if there's any Fibonacci projections on the downside. Okay, there are some numbers down here. Let's take a look at this. So low target 1 was 1761. That one's history. Low target 2, 1683, 1635 from a Fibonacci viewpoint. That's what's out there. Let me go over to the daily real quick, see if there's anything there. Yeah, we've got 1717, 1680, 1657. So we're getting a clustering of numbers in mid 1600. So there's a chance for it to hold there. But whenever you're depending on Fibonacci numbers to save you, you're probably in trouble, because the trends are completely down on daily, weekly, and let's go over to the monthly here. And on the monthly, we're seeing all a negative ppm1, so major resistance at, it's not in play right now, 1859. The 21 period moving average is still up at 0.59, so that could represent the primary demand line here on a monthly basis, 1734, so we could spike a little bit below it, 1699, which we've done, possibility of going down to the mid 16 handle, and then there might be a trade back to 1734, 1760 in that range. And you know, if we look at the market grid here, you're going to see 1692 is S1, 99 is low, so we're almost S1, 1652. So the cluster of numbers is right there, 1670 down to 1650 is the next shot at possibly some support. Yeah, so volume's okay. I see some volume talk, and that's just, should be fine. I can crank it a little bit. So I cranked it. You should be getting, if this is too much, let me know. So yeah, so that summarizes. Let's go to silver. I know it's somewhat, it's never a funny trade, but the whole idea that somehow silver was going to get squeezed, and anyway, there's a bunch of stuff going on around Reddit. There's stuff going around the street talking about all these shortages and all kinds of stuff. And I told you folks this before, is that back in the 90s, I ran a hedge desk with all we handled were users and producers of metals, primarily gold and silver. And I can tell you that silver is how much do you want? It's out there. Gold is how much you want. There's no shortage. They're really not precious metals other than they're endeared because of history and other things. But I can tell you, these folks, whoever the producers are probably the big sellers here. They're hedging this thing. Maybe they'll end up getting caught in a short squeeze, but right now they're gonna hedge those inventories because something drives this market different than others, and this because it's a commodity market. If you're a producer, you know what it costs you to get it out of the ground, and so what you're seeing here, I know that people talk about you go to a coin dealer, you want to buy bullion, it's $35, whatever. That's dealer premium. I also used to work with a firm, we were commodity brokers, and we also had a big coin and bullion operation. And that's just premium that dealers get, and they're gonna, whatever people are telling you, the dealers are probably, you want to know who's behind that is probably the dealers. But let's go and look at the silver chart so we can get a good handle on this stuff. Silver is I think it's going to end up moving down to its 200-day moving average, and that right now is 24.21. We're currently 26. We're gonna keep moving down. We've got acceleration going in on these PPMs. We got PPM 1 in trend mode minus 0.41. Lots of resistance at the 2720, dropping about 10 cents a day. So that's going to keep coming down, and that's going to be your resistance. So a simple 10 period moving average is your resistance, and PPMs are trying to turn up PPM 2, but there's nothing material here to even look at. Let's go look at the weekly. Weekly, you have a minor uptrend here on silver. It's got a much better profile than gold does. And what we're looking at here is that we've got the primary demand line right now, 2631. So basically where it's trading right now, that's the 10-week moving average. It's up at 0.11, not really a lot. The PPM 3 is up 0.75. So that's the major demand line, which is 2441. So this is kind of lining up with everything I was just talking about, moving down into 24 handle, possibly even down into 22 handle on silver. I don't think there's anything really on the monthly last time I looked, but you do have the 10-month moving average 2484. So that's going to be major support right there. That's your magic number. Whether you can get a bounce off there or not, if you're looking to play this thing around 24, 85, 90 in that range is going to be the number you're going to watch. So we're looking at $1.50, $1.75 plus on the downside yet. But that's going to be your major place where you're going to want to buy. So the uptrend, there is a secular uptrend on silver. On gold, it's not that way. So you have the inversion on gold, you have secular downtrend, and on the silver you have secular uptrends. You got PPM 1 3.0, 2.29, and 1.06. So this, I was talking about that trajectory, the trajectory of the moving averages. This line is just moving up on a monthly basis. It's moving about 60 cents. So that number is going to be 25.50 as we come into April. So this month, 24.86 is probably going to be a pretty strong number to play against there. Yeah, I've heard that story, Patriot Trader, about the uh, trying to buy physical in hopes of breaking it. The dealer's got to love you guys if you're doing it. That's all I can tell you. Because they got as much silver as you want to buy. And I've heard all the J.P. Morgan stories and all the stuff about the manipulation. All right, so that's silver. Let's dig into. Let's go to Bitcoin next, and let's start with the daily. And you know, we did get an RTX sell over here at on 219. Kind of went up to the upper end, but we did get our 2-3 days down. Sideways, it continued to drift, and now we're seeing that the short-term trends are down, but we are trading above the 10-period moving average right now. So that is going to put some pressure on this, maybe turning up in the next day or so if it can remain above that crossover point, which is 49,171 to 49,519. So if we can stay, let's call it, stay over 49.5, about $1,000 lower. If we can stay above that for a couple of days, we'll get this thing to turn up, maybe have some potential upside again on this. The real story being told here is on the weekly. And weekly got the RTX sell signal on 221. We have had, this is the second week down, so in theory, this could be the final week of the downward pressure. But I think, and I talked about this last week, that we're going to stay within this grid. Let me bring that up so you folks can see this. Is you're going to stay, it's a very broad range. I would use the 10-month moving average. 40,009 is going to be your extreme if you even got there. Probably more likely it would be an S1 43,650. On the upside, you're looking, R2 so far has been almost exact hit, 52,624, 52,639. So whether that's probably not the range since we're only 3 days into March, so look at maybe a R3, maybe even going back to RXT, but we're going to stay in this range above the 10 and below the extremes in this pattern. So 55,843 is going to be big resistance. Last week's high was 56,650, so that'd be basically a retest of last week's high, but this pattern is pretty substantial. Did we get it? No, we didn't quite get an STX buy signal, but it's pretty close. But anyway, there's not a lot there, and the monthly charts are on this platform that I'm on, which is TradeStation. It's not even worth looking at, though. We did get an STX sell signal, and what really is likely to happen here, and this happened, I remember back in the day when Tesla was going straight up, all that was happening, is we get this giant flag, and these, let me draw in a couple things here just to finish this out. So these grid lines will start to come in just a little bit and probably form out, and the trading in the market will be in this range. And ultimately, I'm not drawing very good, so bear with me. Ultimately, what it sets up what I call the dragon head here, and then it ends up going much higher in the pattern. So I'm going to go back to the weekly. I think there's some Fibonacci pattern that is out there that I can talk about. Yeah, no, there's no current Fibonacci projections right now, so there's really nothing to go on. Okay. So I think what I'm going to do here is take about a 3 to 5 minute break. We're going to come back. I'm going to bring up our platform. We're going to go through a lot of stocks here in a few minutes. I'll probably be flashing back and forth between our platform and TradeStation, and I'm going to cover a lot of the stocks that you folks are going to want to ask about. And then by the time I get through that, then we're going to be late in the session and we'll be winding down. But we are seeing quite a bit of selling yet come into the markets. We're looking at the composite trading 13,022 on the cash, the futures 12,699. So we're down at some of those levels I was talking about earlier in the analysis. Yeah, you got the SQs up 8%. Very nice trade if you got that on. And the Russell is still under pressure a little bit, but doing much better than all the other markets. So the Russell and the S&P are the winners. NASDAQ is getting hammered big time. And this is all going to make sense here in a few minutes. So let's take a few minute break. If you want, I'll put the I can maybe put some music on for just a couple minutes, and then I'll be back and we'll go through some other stuff and talk about it then. Okay, folks, I am back. So thanks for your patience. I had to get another Runa. It's in black, but it's time for the pop, not a beer. If you're not familiar with Runa, this is the best energy drink around. Yeah, see what you folks are talking about while I was gone. Yeah, probably true about the crypto, huh? Yeah, power outage. Yeah, we're getting a little bounce. Yeah, nothing goes straight down, right? So hopefully this next segment will be interesting to you folks. It's somewhat on the fly, but I think you'll find it interesting, to say the least. I'm just getting a couple things set up. Yeah, we're definitely going through Amazon and well, Tesla for sure here in this section. I'll get through to that here in a few minutes. All right, so let's go over to, we're going to go to the Portfolio Expert platform. And I'm going to show you a couple things. This chart that's on the screen here right now, this is the rebuild, the ARKK full list, doing a multivariant trading. And I just want to, you know, this thing rolled over pretty hard, and there's a lot of pressure in these stocks. I don't think Kathy has enough money to hold up Zoom and some of these other big stocks. There's a lot there. But what I want to show you is a couple things. We're going to go through constituent list and look at it. But what I want to show you right now is what's going on. So there's 108 symbols, or actually there's about 54 symbols in that strategy, and this is the K. And right now I've got 108 here. If you know what, I think I can blow this up. Hang on, I forgot about this. This was one of my issues in the past. Bear with me 1 second. I zeroed in my zoom on. Yeah, give me just a second and I'll zoom in, okay? Yeah, it's not going to work out for me. So up in this corner, I know this is really tiny, so you're not going to be able to read it. So I will tell you what it's telling us. There's 108 symbols. There's 46 long. So right now, just looking at the stocks that Kathy Wood owns, we've got 48% in cash right now. So if we go over to the open positions, this is everything that's owned right now, things that are working, what models it's on, and all this. And I'm going to go through and look at these stocks here in just a minute. But if we look at right now, if we can look at things by percent portfolios and everything. The biggest bet in here right now is Twitter, and Kathy's biggest bet is Tesla. Well, you got to go way down the list. We're about number 12 in Tesla right now, so we've underweighted a lot of this stuff. So right now there's only 42% of in cash, 60% in, and so we're going to take a look at some of these stocks, and we're going to go from there. This is the Twitter, and let's go to 2-year look back. Here we go. So this is the last trade on the Twitter, and as we look at the PPMs, though, this is the same PPMs that are in TradeStation. Those are proprietary indicators, and these indicators are all starting to roll over. PPM 1 is already rolled over. We're very close to rolling on Twitter here and start to set up a large pattern on the upside. That's going to be most likely what's going to happen there. So I'm going to, like I told you, I'm going to go back and forth on some of these stocks here, and I'll bring up so here's what Twitter looks like here. You can see on a daily it's rolling over, starting to head down, but let's take a look at the weekly. And this is going into this giant pattern here. So Twitter's is definitely stalling here. We're going to go into a sideways, and this is going to keep the NASDAQ from doing a lot. Now we've rallied 40 handles here on the NASDAQ. I think we were down 345 a minute ago on this thing. So we're definitely seeing a little bit of a bounce here. We're looking at Russell's only down 0.1 on the day. So we're definitely going to see some bouncing here. Like I said, in the analysis on the indexes, there's no major declines happening here from a big decline. We hit, basically we went down to that 12,600 number that I talked about on there. So let's go back to the platform. I just want to look at all these open positions here, and let me try to. Yeah, so bear with me. I think I've got this so I can actually zoom in on this 1 second here. Yeah, this is going to be helpful. So I just got to go over just a little bit more. Bear with me. Almost got it. Finally. Okay. So now we can break this in just a little bit better. Here was the Twitter. Like I said, it's got 2.16% in there. And you can see that the current profit is up 35%. What I want to show you, the reason why I want to show you this is that when you're not relying on Kathy Wood to do the right things in trading, this is why, this is how our platform works from the standpoint of looking at all the different things here. So if we go here to, here's Baidu on a weekly model. I'm going to show you this. This thing has been long forever, way back in June of 20. So we're still long, but this is setting up a giant pattern here. And I'm going to go through a number of these stocks as fast as I can, going back and forth between our platform, our signals, and all that. But look at the PPMs, how they're rolling over here. PPM 1 is about to take out its second derivative. So let's go over to TradeStation, take a look at that. This is Baidu. So we're going to hit a lot of stocks here, and bear with me. I'm going to blow this up so you can see this pattern. This works out really good, actually. So what we have here is we actually got an STX. This is the weekly STX buy, but we're going to go sideways. The 10 pairing moving average here is at the 266 level. We had a low of 277. So we're getting pretty close to a low in this pattern. We still have very positive PPMs across the board here. But what's interesting is if we go to the daily, almost all of the models on a daily have exited all of the stuff that if I built, matter of fact, I think I'll do that. I'm going to show you how you can do this. This might be interesting, hopefully. So I just need to, I got a couple things I'll show you here. So I've got an Excel sheet. These are all the everything that's in the platform. That's everything that's in the ARKK portfolio. So I'm just going to go over here and I'm going to build. I'm going to build a new portfolio right here for you, and I'm just going to put the daily models on this thing. So this will, believe it or not, this will take just a second. We'll go ARKK. ARKK full list daily. Go next here. I think they started on somewhere around April 2017. Okay, so I'll set the beginning date there. We're going to put $1 million in the account just so we have plenty of money to trade all these stocks. And I'm going to be aggressive. I'm just going to trade the daily. And you know what? I want to go back. I just want to start. Let's just go from 20. Let's just go here. All right, so I'm almost done. And what I want you to see is what the current positions are. And if you, it really helps. So I'm just going to drop these stocks in here, and I'm going to optimize them for a daily model. I'm going to add the symbols. I'm going to go next. It's calculating an allocation factor, how to use the money, putting almost 3% in a trade. We go finish, and it's running. So this will take just a second. I'm going to go over and we can okay, so it's already run. So what I want you to see here is the open positions. There are some opens, and of all 54 stocks, actually it's interesting, we do have a position in Zoom, but Twitter, these are the only symbols that are owned right now. HUVA, let's see here, I can actually zoom in on this, hang on. Here we go. These symbols here are the only ones that are being used right now. And so there's what? 8 long symbols out of this entire database. If we go over here and look at the current projected, it's got 8 long, 75% in cash right now, just on the short-term models. So you can sit around and watch your money drip away in ARKK by owning it, or this is the protective strategy that we have that is doing that. So it's interesting that these positions, if I go over here and just look at the graph, these are the positions that are on there yet, and these are all the trades. Let's go to this 2 year. Let's go to 1 year. There we go. So you can just see the last year charts. You can see exactly, here's ICE. And this is actually a new trade just the last couple of days on ICE. And so anyway, I just wanted you to have a feel for how much is rolling over in this strategy and what it's doing there. So we're going to go we're going to go back over, hang on. Let's go back to TradeStation here, and I will go back to full screen so you can see what's going on. What time we're getting to be? 1 o'clock. Okay. Yeah, you folks got any questions on that stuff? Just trying to get everything to fit after I zoomed in. Sorry about that. I'm really not hating, okay? These are just, that's interesting. Uh, I'm not a classic hater. Who is that? Yeah. No, I'm not a hater. These are the realities of what's going on with these stocks, right? And this actually goes, I'm glad that I'm glad you're calling me a hater because let me explain something. This is exactly why ETFs are garbage because you get this basket and you're stuck with them. And that's why you don't want to be stuck in these stocks because there's no in a basket. You don't want to own baskets of stocks. You want to be dynamic. You want to be able to own a dynamic basket. We call it dynamic direct indexing because you want to take these things and rebuild them and repackage and trade them on multiple levels because these fund managers don't have a clue. Kathy Woods is a classic ETF modeler. They're not doing anything special. They top weight the top 5 to 8 stocks, sometimes 10, will be where the bets are made. Everything else is filler. Jay and I were talking about this. There are so many. If you look at KG, go through the whole spectrum, most of them own, there's so many common stocks in every ETF, it's a joke. They're not doing what they said they're doing. And now all they're doing is making a bet at the top, and they put a story out there, and they did really well in 2020. So there's going to, what you saw was something that happened. And all I'm showing you is on a short-term basis, most of those things aren't even long. When we trade them on a multivariant model, we're 50% in cash. She's buying more. That's the difference. Not hating. It's a difference in a strategy. And if she was smart, she'd call me up and we could show her how to do really wonderful things with her money. That's what we do. And so, but the point is, she can't even do that because the most cash she can go to is 35%. So I'm already more cash than she can go to. So that's the problem with ETFs. That's the problem with managers in ETFs. That's the problem with the ETF wrapper. That's the problem with mutual funds are even worse. But ETFs, there's some flexibility, but you still are trading by mandate. So watch the video I did on, I think it was ARKK I rebuilt. Go take a look at that video on the channel because there's some really good stuff there. And it's about the construction of this crap that Wall Street's selling you, okay? This stuff is crud. I mean, there's thousands and thousands of ETFs, and the managed ETFs. And, Kathy's charging you 0.75 to be down 18% off the highs, whatever it is now. So yeah, let's just bring it up. So I'm not being a hater, my job, it's not about, it's about actually looking at what's going on in the markets, making an analysis of them. And it's not about anything in particular, just that, I made a tweet last week that her transparency is going to end up to haunt her. So people are going to start fading her. She goes out and buys Zoom, and everybody hammers Zoom. So now the punishment is coming. So, what was it, PLTR? I've actually proclaimed that to be the most dangerous stock on Wall Street. And but look at ARK. It's down 3.75% today. I mean, this thing is just getting ripped. Let's take a look at the, so 3.75 for the day. And I wanted to look at something here real quick. But yeah, so I'm not being a hater at all. That's not at all what's going on here. I'm talking about the investments, the structure of the investments, and what they're doing. If you want to own something that's down right now, this is ARK F. we're looking at, almost 4% down today. So let's take a look at something really quick here. Bear with me. Yeah, so here's a story I'm just looking at. She bought $95 million worth of Zoom. Let's see how that's doing. Down 8%. Not a good day. So, yeah. Yeah, so let's take let's go back and let me put it on screen so you can see it. But yeah, here's Zoom. Yeah, not a good day. PLTR. There's a magic number on this stock here, which is around 22.40, 22.50. It takes that out. Somewhere between $15 and $12 will be the target. And I think it was over here on the 18th, maybe. Yeah, it was the 18th. Kathy came in and made a big bet on this stock. Just fading. I know people are telling me she's doing 2 and 3 and 5 year outlook. Yeah. You watch the liquidation in these funds after the sell-off. It's you know, you create that kind of volatility, people are not going to hang around you. That's all there is to it. I love her when it's going up, but the point is I'm not a hater. I'm actually just breaking down the investment, what they're doing, how they're doing it, and how there's a lot better ways to handle those ideas than what she's doing. And if you, like I said, if you look at the construction of any ETF, not her ETFs, any ETF, and there is, I told you folks last week that I'm working on a new channel called ETF Hackers, and I'm going to show you how to hack and do things with ETFs with other people's research. And I tweeted to Dave Portnow, who's been a big against the suits, and now he announces that he's behind, BUZZ. It's a new algorithm-driven ETF. I said, what? You troll the suits, and then you become one. So it's just one of those things. What we're talking about here and what we're doing on our channel, I'm trying to give you folks the power back to you folks to be able to manage your money, eliminate 0.75 fees, get rid of all that stuff. That's really what it's about. But this PLTR that I have on the screen here, this is really, this is the daily, but we start to look out and look at the weekly, you'll see this thing is probably going back to the base where it came out 10, 12 bucks. It's probably going back to where it started. I mean, this is a really bad stock. And they don't have any history. They haven't been around long, and they've got a lot to prove before they're going to be in a place to really make a lot of money. Yeah, I hear you, Justin. Does she have insight? I don't know. All those stocks that she bought were pretty easy, right? They're very visible. Wasn't, she got, Tesla's been around. Yeah, I'm probably going to do a video. It will be somewhat of a troll video, but it's sort of like, is Kathy really that good, or did she just get lucky? Because all of those funds did nothing prior to the pandemic and the big rally we had. And now I believe all that money is going to be taken back. All the money from October to January, the money's coming back. And you can see it in this chart that I have on here right now. They're taking this money back. So if you're going to hodl this, you're not going to have a fun time. You know, it's just going to be a rough ride, I think. And the whole basis for a lot of these things, they're just not there. I mean, let's face it, Tesla's off the map on PE ratios. You can't even consider that and think you're buying Tesla for a fundamental stock. You know, so let's just let me get set up here so I can get ready. Why don't you folks go ahead and yeah, let's see. I don't know a lot about the SPACs, to be honest with you. I haven't had a chance to really dig into them. Yeah, where will the money go? That's a good question, and that's what we have to figure out. I think money, some of it will just go into, maybe some of it will go underneath the mattress, and some will just go into cash, and maybe more of it will end up in Bitcoin. But I think, you know, there's a lot. We're going to go into this grinding phase. So let's do this. It is 1:20. I kind of went on about a lot of stuff here today. Why don't you folks give me some stocks that you want to do? I'll do Rocket. Yep, you're on it. Yeah, I wish I had more to say on the specs. I just don't have a handle on them. Yeah, so yeah, the longer term projections for the S&P are still in play. 4,600. That's still a possibility. Nothing's changed, as I said. If you watch the earlier analysis that we did have about, we've got the intermediate long-term trends are all up. Looks like we're getting some selling coming back into the markets again. So a little bounce and back in again. Let's take a look. I haven't looked over here for a while. So you guys are giving me lots of good stocks here. Just bear with me a second. And I'm going to write down some of these, and I'm going to roll through these pretty. All right, let's hit some of these stocks. And okay, here we go. So we'll start with Rocket. I know that was a nice squeeze job. This is a weekly. You can see that trade yesterday. Might have to go into a short-term chart to figure it out. RXT sell yesterday. So yeah. So I guess if you were on it, you could have bought some puts or something yesterday. Down 32.28. Not a real clean chart. Not really much to go on. We might be able to break it down into like a 60-minute chart and maybe find something there. But there's not a lot there. This is just another squeeze play. If you happen to get it on, you have to sell these surges when they happen. You know, I mean, GME was just an amazing run. And speaking of GME, this thing is actually consolidating. It's interesting to look at GME. There's really nothing there on Rocket that I can help you with. Let me get out of here and get into a daily here. So the spike is interesting, 184 high. It actually hit 200 exactly on that run in the aftermarket. This chart only illustrates the intraday. So, but this thing is actually setting up potentially for yet another run on GME. Now we're trading 118. One of the things that I talked about last week on GME, if you're an insider and you have stock, anybody that owns stock, no one's feeling broke right now at $1.18, right? It's not 400, but it's not $4 either, right? Like it was. So right now the capitalization is around $9 billion in this company. So they have a lot of opportunity to do secondary, to restructure the business, to do a lot of things. And I know they're looking at that. The CFO left, and they're looking at those reconstruction ideas. I believe it's Steve Cohn that owns 10%, is a big hedge fund guy. So they're in their activist type, and they got a lot of money right now. You know, GameStop might be a shit store to go into, but I'm telling you, it's the company itself is doing really well right now from a stock viewpoint. I realize negative earnings and all the stuff, right? The fundamentals, everybody will tell you the fundamentals don't support it, but the price gives a lot of opportunity to refi and to do some things. All right, so here we go. I don't know a lot of these symbols I chose, and that one was wrong. So here is Compass. We got a daily, sideways, nothing there. Got to go to weekly really quick. Yeah, another new company. Yeah, see, I think a lot of these big high flyers are coming back to square one. This was, where'd they start at? $22. I don't know that we're going to 22, but we're going to come back into this base in here at 30, 35, maybe down at the lower end of this weekly grid, which is 30, 35, 32 is a possibility. This thing is trendless. There's not enough data here really to do much with this one. And this is going to be, a problem. Here is HOL, and what is this? Helicity Inc. So this is another one. You get the big ramp up, you come out of the box, and what's happening is the reality starting to set in a lot of these stocks that blew up, and so that's definitely it. Now, I don't know. Is this a SPAC? And is that what this is? So I don't know anything about these companies, so help me out here. Yeah, okay, so Peter, what I'm talking about here is all the money that came in these nothing stocks, right? If you go back and watch the replay, you'll see where I think the trends are. And that 4,600 is for probably 2022. It's not going to be next week. So we've got a lot of work to do up here, but I covered that. So watch the replay, that'll help you out. Yeah, so I guess my point is see, that's what's happening with all these stock. Here's BNGO, right? You got all these stocks shot up. The money's just coming out. They're taking the money back out. That's what I'm talking about. I'm not talking about indexes. I'm talking about these individual stocks. There's in our database alone, we have 16,500 symbols in the database. So there's a lot of symbols. There's a lot of air in this market. There's a lot of things that are way overpriced, and they're just getting repriced now. All the euphoria and the excitement is gone. Okay, so let's keep going through these symbols. So here's CrowdStrike. It's rolling a bit, but you still have, this is a weekly. I'm going to stick with weeklies on most of these right now. And so you're looking at the moment, you're looking at it trading down on a weekly basis down to the just about to the S2 level, which is 201. The support line's at 188. This thing's not really going anywhere. The play was, this is one of those October to January runs, and they're just going to consolidate or pull back here. And probably the bigger the run, the more air that's going to come out of these stocks. Which the healthy part of that is the indexes will grind up here and they'll be reset, and these stocks will be a buy and there'll be a trade. But it's right now, you're just looking at things really starting to fade across the board. And a lot of stocks that you folks want me to look at here. So here's URA, uranium. That's been in play. We do have some Fibonacci projections. 2097 is the min. That may have been satisfied, but 2346 would be an extreme. PPMs are actually very bullish, so you're still in an uptrend. That trajectory that I was talking about earlier, definitely a full out trend here. This is a weekly, so there's still good things here ahead for this one. Probably consolidate if we don't get an RXT sell, and then we'll start to move this one higher toward those numbers, somewhere between 21, 2350, something like that. Yeah, I guess, Scott, I guess I probably am saying that. I think ARKK could go to 105. That's big, 30% drop or something. Okay. Yeah, I agree with you, Ronald, on the Bitcoin's 3 transactions per second. It definitely needs some acceleration there. Yeah, Bitcoin is still faster. Funny story, I guess it's been almost 3 years ago, went with associate. We had to do a trip to Vegas, and I thought it was cool because Expedia would take some Bitcoin, and I figured out that the rooms that we got were almost $5,000 in today's Bitcoin price. So it was funny because I was like, oh, look, they'll take Bitcoin. I'd like to have those little teeny bit of that coin. I think Bitcoin at the time was like 2,200, 2,600. So it's pretty funny. All right, let's get to work. Apple weekly. Man, minus 0.73. Short-term downtrend. Major resistance on Apple, 130.85. It's down on support, which is 115.24, the low 121. So there's a fair amount of support down here, but you know, this is part of the consolidation that we're going to see here. I'm just going to take that off. So here we go, forward weekly. We've got the Dragon Head. We got the RXT weekly sell back on January 22nd. Went sideways for a few weeks. Now we're trying to get another one, but this is typically this is going to go higher. There's no Fibonacci's, nothing really there, but the trends are very, very robust here from that standpoint. So AMD just kind of flat. It's been flat since last August, really. There was a big overperformance last year, and then it's just flattened out here, and PPMs are actually very negative. Major resistance here at the 10-period moving average. Let me put this up on screen. So we're looking at AMD 79.39 is major support, but the 10-period moving average is down at 1.18%. So it's pretty major resistance. So best case, sandwiched between 80 and 88, maybe 80 and 86. Not a lot there, but this has been a sideways trader anyway from that standpoint. So NVDA, we're slicing through. We're heading toward the support 495 on this one on a weekly basis. PPMs are negative on PPM 1 and 2, but there's a pretty decent uptrend on PPM 3, which 491 should be rock solid on this one. And that's going to be your primary demand line in this trend. And it's just been consolidating, as you can see, for a while. We had RXT sell here. We got our sideways. We had another RXT sell just on 212 and then sideways to down. So we're following all the patterns. And this larger pattern is somewhat concerning because the market's trying to just flatten out, potentially roll over. I'm just going to go to a long-term chart on this real quick. Yeah, so that's what I thought I'd see. So we've got the Dragon Head set up, which is a consolidation pattern. The PPM 1 is at 3.28 on the secular trend. So the 502 is major support. So that's right there. That 500 level is going to be it. We should continue to climb along that line right now, even though we've penetrated through these lines here. They're not really important. Okay, so this is, let me get out of the monthly here. Wow. Yeah, kind of in the NASDAQ pink sheets almost here, but yeah, this thing's pretty tough. You had the spike at 10. Man, the promoters were good on this one. So we got a RXT sell way over here. It drifted lower. Got a STX buy, went sideways. Now you got a RTX sell 2 weeks ago. Now we're seeing it fall back in. Maybe 240 is going to be where this thing holds. If it doesn't hold there, then you go right back to this base. These things don't have a lot to hold them up. Here's Floor. We've got PPMs are all solid uptrends. We should stay between the 21 and 10 period moving average, 1634, 1812. A close over 1812 will start to move it up toward the higher end of the grid. But this is a really nice uptrend. So we're just going to continue to crawl up. Probably between 20 and 25 will be your next level where you'll see a lot of resistance. Hang on, already did that one. I don't remember if I did. I did do Tesla, I think. I'm not sure, but let's do it. Let's do it again. So Tesla RXT sell back on 8 on January 8th. When we've been going sideways, we are now on major support PPM 1 or PPM 2 1.66. So this should hold. This level here, 645 is going to be about it. The low has been 654. So 45 should do it. And then you're going to get sandwiched between the 21 and 40. So you're looking at 645, 780 is going to be the range there. But the big upside is done for the moment on this one. Time we're getting to be. Just going to flash over to the S&P here, down 39 handles, down 1%. We just punched out new lows just a few minutes ago, so we're definitely seeing some continued selling in the futures, and I'm just doing a quick flash over there. You know, with all the money that the government's paying Pfizer, you'd think their stock could be doing better, right? We're about to get an RTX sell on a weekly, though, which is not that good. You have negative trend on Pfizer. Nothing really there on a weekly. This thing is drifting, and yeah, it's kind of bad because we got what I call the alligator. That's never a good pattern. So it's just likely to continue to drift. These moving averages are going to continue to roll over into the pattern. So maybe some support down at the S3 STX level. All right. Here's HGEN weekly on support. Not a lot to say about it. Good, solid, intermediate, longer term uptrend. So there's this is pretty much it, but you're going to have to get back above that 10-week moving average. So a simple 10-week moving average breakout, which would be 1898. Fair ways to go there, but this underlying support is 1545, 1608 to 1545. So here we are at FUBO TV Inc. Support's a ways away yet. You got to look at the 3016 level, probably going to get sandwiched between the averages here for a week or so. Looking at the grid, you're probably looking at a range of maybe 30, 37, 38, 39, we'll call it 39 high, and 3161 on the downside is probably going to be your range. I don't see any trends here to play. The underlying trend is still very strong at that 21 at 3016. So you can buy against that level, but it doesn't look like there's a big bounce or anything in here. I think this actually, when we start to go through a lot of these symbols and all of the stuff that we're going through right now, is we start seeing similar patterns. So we look at all the big momentum stocks, all the airs coming out. This is what I was talking about. People equate talking about having these, all the air come out of these stocks. The ones I'm talking about are these big run-up stocks. And so Apple's is not one of those. Tesla was, but we're on support. So we're seeing a lot of these things pull back to support. You go sideways, you're looking at 4, 6, 8 weeks of sideways, and then maybe then you can reset the market. One of the things that I haven't went through, what time we got, quarter till. Let me, let's go over to our database real quick. So I'll show you something on here. And this is what I'm going to be watching here, and I'm going to attempt to zoom in on this thing here. So bear with me. Yeah, so when we start to break down this pattern, what you can see here is we've got the short-term database at 31.15 long. That drops below 27.5 today after the sell-off, which I suspect it will. Then we're going to 22%. Anything under 22 tonight tells us that we're going to see a full liquidation, which means we're going to go to all of these extreme support levels on the markets. And that's going to be really, really the key here from that standpoint. One of the other things that I talk a lot about here, and we're seeing this, I think I can fit it on the screen. Bear with me. Yeah, one of the things I'm going to point out here is our optimized weekly models. So we have, they hold typically at 201 days. Right now, it's only 70 days. About 40% of the duration has been experienced on these trades, but 84% of the profits, and that was at 92, and we're starting to see these peel off. We saw in last week's run, we did see some negative runoff here. I'll show you here real quick. Is the weekly, you see, had 915, almost 1,600 sell signals versus only 180 buy signals here. And we had negative rotation on the database, and we dropped just slightly from about 84 down to 79.5%. So we're, and there's 16,441 symbols in this database that we're monitoring. So this is just telling us that we've definitely got some, there's some rotation happening here. The weekly is, as I talked about, is going to start to see further rotation from that standpoint. Yeah, Timothy, I did a big interest rate on the replay. We'll actually mark all the places where I was talking about different things, so you'll be able to go and watch the interest rates. I did a pretty substantial walkthrough of everything there. Yeah, I think the money is still flowing out. Yeah. Yeah, it was so much more fun last week when we had that run up on GME happening right at the close. That was fun. All right, let's go ahead. What time we got? 48. Let's take a check in with the markets here. Down 31. The low's been 24. We're trading 37, so we're getting a bit of a bounce off of the lows here. As always, and I'll go back to this in a minute, but we are focusing in on the last 2 minutes of the trade and the yeah, we'll just get, the last couple minutes and then we'll go through the last 2 minutes and then the 2 minutes afterwards. Yeah, good call. Thanks. What would I do without you guys? Yeah, overall, somebody's asking, can I recap what I anticipate next 2 to 4 weeks? Really what I'm looking at here is more consolidation. The downside is somewhat limited. I covered this pretty good in the beginning section, in the first 30 minutes. But yeah, so just really looking at this pullback into some of the key averages in here. And we're going to look at several weeks at sideways and choppy. So there's not a lot to look at there. See what time we're getting to be here. 49, 11 minutes. So we got time to do another stock or two. Yeah, somebody said get some rest, up my game. I've been going for 3 hours, so I'm just getting burned out, that's all. If I feel like my energy's going down, that's what's happening. Yeah, I think whoever asked for this always, this is the bats. Yeah, these things are just crawling down to lows. Yeah, I don't really see anything here. Looks like they're going to try to turn it up a little bit. I don't know how much is going to be on the upside. A lot of these ultra short issues just get hammered all the time. Yeah, let's see. SQ's maybe a little better. Looks the same way. So SQ is about to get an RTX sell signal for the day, which means it'll pull back, which means the market is going to rally. Let's see what, let me go to NASDAQ here. Yeah, NASDAQ's traded all the way down to the STX number, 11,628, the low 11, sorry, let's try that again. Yeah, that is the low, the extreme is 12,695. The low of the day was 12,707. So we basically hit an STX low. And if we close below that number, then that would be suggest to be 1 to 2 days sideways. So it'd be some recovery. But if you look at what's happened, we've done the round trip, right? So what we've done is we start off Monday, Sunday night rally, Monday, and then it's just been a fade job until today. So we're seeing all these things retrace substantially. And when I was talking about earlier, and somebody had a valid question, is that when I was talking about the air coming out of this market, I'm thinking a lot of these high momentum stocks, especially the new offerings and some of maybe the SPACs, maybe a bunch of these that have been hot trades. Those are the ones. More larger companies like the Apples and those type of situations are probably not going to get as much decline here. But if we go to the weekly Apple, you're going to see that we're actually trading under 20-week. We could go down in Apple to the 115 level pretty easily. So there's still some more downside in this market, that's for sure. What time we got? 53. So let's do one more stock here. Yeah, I did do Ford earlier. Oh yeah, I actually meant to do this one, DraftKings. So DraftKings is actually doing pretty good, even though it was somewhat of the high flyer here. Let's go to daily real quick, see if there's anything there. Yeah, so get outside reversal. This is interesting. Uh, so on a daily, whenever you get this outside reversal, if you want to see the exact rules for this, go back and watch my video on the channel. It was probably last September or so, but it was a video just on how to short Apple. The reason why I tell you that video, because it sets up the rules for an outside reversal. So when you get an outside reversal, here's the rule, the basic rules, that tomorrow to confirm it, we have to close lower. Two things have to happen. We have to make a lower low from today, whatever that is, and that is 64.89. So tomorrow we have to go below that, and we have to close lower on the first day after a reversal. And the one thing that cannot happen is you can't take out today's high. So that doesn't look like that would be very possible. But this outside bar also is happening. It's called a key reversal, outside reversal bar, because it's happening at an all-time high. So this is something to be paying attention to. The one thing that there is also in this pattern, you got PPM1 up 1.09. You're looking at a 62.24 kind of thing. So let's go ahead and let's zoom in on new lows on the S&P since we look back. So we're definitely still getting some pressure. I'm going to get off screen here for a minute. So we did print a new low, and typically it looks like the machines are running right now. We're getting some out of sequence trades, and they'll bounce these things 2 or 3 handles and they make a new low. So see what kind of selling we get in. I think this is worth hanging out for a little bit here and watching this close. See if we can punch out new lows and if we get any acceleration of the downside. Here we go. Looks like we're going to punch the lows. Almost got it. But it does. This definitely looks like algorithm trading here. And we're getting, when you see these out of sequence trades, that usually means that there's some very aggressive selling going on, and we're getting them on the sell side. So this is definitely some machine trading. So we traded 2150. Still looks like to me that they're going to try this low one more time before the close. Yeah, I will do, folks, I'll do Amazon and, yeah, I think I did a brief BABA early on. So here we go again. We're going to try the lows. We got 2.5 minutes to go on trade here, on the regular session. Yeah, Charlie, I would say watch my video tonight as far as what I think about tomorrow. I still think there's a bit more downside. But all right, so here's the deal. Yeah, Tesla new low. Uber. I'm going to do Uber, Amazon, and I think that's gonna, and then I'm gonna call it quits. Here we are trading a minute and a half to go. We're trading 21.50 again. Looks like we're gonna punch new lows. Here we go. Trading the lows. Yeah, heavy selling into the close. Here's new lows. Now what we want to watch for is right after the final tick to see if there's any short covering. So we're trading 1850, down 48 handles on the day, down 1.27 on the S&P. 18 prints. Yeah, this is definitely machine trading. What you'll see is they'll punch a new low, it'll rally about 150, 200 points, and then make a new low again. Here's 1750 low. There we go, 1875, right back down. 1750, prints again. There's the new lows again, 1650, 25s, 16 even prints. We're trading through the market grid on 1 minute. Here's 1550, lots of liquidation coming in at the close. And there's the bell. So what we want to do here is watch the trade afterwards for a minute, and we'll see how this actually plays out. See if there's any short covering. So we printed 1550, new lows after the close, still heavy selling. What this typically means is that the ETFs and the mutual fund guys did not get filled in all the stock, and they're still selling some stuff, trying to hedge up some of their portfolios. Here's 14 and a quarter. This is not even 1 minute after, so we're still 14 even trades. So we're still seeing a lot of selling here. This is pretty negative close. It's like they finally stabilized. 14 might be it. All right, let's switch back over. Let's do a couple stocks, and we'll call it from here. Yeah, this was a big day. We closed below the 40-day moving average on the futures, down 50 handles here. We'd have to rally back above 38. That was the number I talked about last night. I actually didn't think we'd see 38.13, but we did. That was S3 for the day. Let me bring that up on the screen. And so, yeah, you'll see S3 was 38.13 even, 14 even. So we did on the futures, we actually did an R2 S3. It's pretty big volatility. The cash, just look at the SPX, then I'll do these two stocks and we'll call it quits for the day. But yeah, we got to 74. We didn't print R1. 24 was S3, 3809. If you remember, this 08, 05, we did print down on last week. We printed down into the 17 handle. We got, or 17, the 37 handle. We got to 37.89, and that's where we bounced. And we literally got that RTX sell signal 2 days ago, and you can see the next 2 days, that one played out really good. Somebody asked me on Twitter if I thought that would be a play, and I thought it would be. And here we are back at STX almost on the SPX. that's a mouthful. At 3809 was the extreme, and we printed 18 low for the day. Is that right? Yeah, 18 low. So we printed just below S3 in between those numbers. Okay, so got two stocks to do. I'll start with Uber. This is the daily Uber up 2.6. This pattern we're starting to see, we're still in a negative pattern here. We were able to close over the 10-period moving average at a minus 0.85. What's driving it is the PPM2, 0.28 positive, 0.22. So there's somewhat of, I always refer to it as a magnet, or the demand line is around 50, 55, 57. So we're trading just right in that range. So look for it to maybe get toward the 50, 57. Maybe it can make a turnaround there, but it's going to take a few more days. I'll look at a weekly real quick. And weekly is, yeah, there you go, the demand line there, 55.05. So that's the magic number. That number, if you look back through this whole pattern here, that 10-period moving average has been the magic line. There's only been 2 days during the last, this is weekly, over the last several months, going back to November, that we've even closed underneath that. Okay, let's do Amazon. And Amazon weekly trading down on an S3 29. We're through all the averages. I hate to say it, but Jeff Bezos is going to lose some more money before this one's over. So we're looking at, there's really no support here. Let me look at one thing here, 'cause this is a little more complex. Yeah, so there's some objectives on the downside on Amazon. Looking at, yeah, if you own it, you're not going to like this number. 2814 on is a Fibonacci objective. PPMs are in, 2 of the 3 are in trend mode to the downside, so that's an issue. Let's take a look at the daily real quick. Good news is you got an STX buy signal today. So we should see maybe 1 to 3 days sideways, but it's going to be, the target's going to be, and this is actually, this market grid I'm showing you is actually for tomorrow. R1 is probably, R1, R2 is going to be the target over the next couple of days, be 30, 23, 45. The support level is going to be S1 2986 on that one. So that should do it. Well, folks, thanks again for spending all this time with me. Much smoother than the last few. I did a lot of work on it, trying to figure out what we needed to do to get this channel and this stream going. So that's what it took, a little effort, and I got everything cleaned up. So I'm glad everything worked out, and I'm glad you folks were all here. And don't forget to hit the like button, subscribe, and hit the bell so you know when we come live. If there's some craziness over the next couple of days, it's possible I'll light up the screen. I usually try to do it if it gets totally crazy. So we'll see how everything sets up. This was definitely not a friendly close today. So we'll see how we trade later tonight. And as always, there'll be video tonight and tomorrow night for sure to finish out the week. And we've got some fairly big numbers coming out tomorrow again. And if ADP was any kind of indication, then we've got some bad employment numbers coming at us. So anyway, folks, thanks for watching. I really appreciate you coming and spending the time with me. Thanks, everyone.